All right, hello everybody. This is Jesse here again with Forest Real Estate Group, taking a look at some charts. We are talking about the shift in the market, and so people want to know what the shifting market is all about. Right here, I have a list of mortgage groups, mortgage companies, um, and as you can tell, since 2020. You had a big, each one of these bars represents a month. So in 2020, you can see the big drop off that we had. And I think we all know what happened in 2020, but it's a common theme across the board for all of these mortgage companies. You can tell each one of these bars, like I said, is a month. So for 2 months, we were going straight down. We had the Fed come in and prop the market up. And I want to say it's like in March. So since then, we've been kind of sloping up, and now we're back on a slope bird down, and we're testing the 2020 lows. And same thing with this chart here. You can see for 2 months, dropping down here, and now we are rolling back over, and we're going to test these lows here from COVID. And so let's take a look at the real estate services. And so this is a list of different real estate companies. What we have here, this is CBRE, which is a commercial real estate group that does investments. And CBRE Group is a Fortune 500 and an S&P 500 company headquartered in Dallas. It's the world's largest commercial real estate services and investment firm. This is based on 2021 revenue. And so they're the largest commercial real estate service and investment firm based on that revenue. So they're pretty big. And so again, you can see the 2020 right here, the low. And we've since run up, and now we are starting to roll back over, and we are testing the lows here. And let's see if we can find another favorite of ours. This right here is EXP World Holdings. So in 2020, we actually were going sideways, and this company was just strong through 2020, 21, and then now we come back down in 21. And so this company was really strong, and now we're starting to roll over, and we're starting to come back down to flatline. Let's take a look at some other ones here. You can look at this guy here, but you can tell the theme across the board is down, and every one of these little marks, these candles are a month in duration. And so let's look at page 2. And here's some favorites that you might know about. OfferPad. You can see OfferPad is coming down. They're like at all-time lows at 93 cents. Here's OpenDoor. And so OpenDoor is now testing their lows. And let's see what else we have here. Here's Remax. So you can see that COVID dump there. And then the run up. And now we're just working our way back down and testing the lows here. And let's see, do we have another one? Oh, here's another one. This is another company that is new on the market. And so they've had a pretty good run up to $4, and now they're working their way back down. And they are testing these lows here at $1.53. And so here's another favorite, Redfin. So you can see Redfin through 2018, 19, and 20 going sideways, and here comes 2020, and you see the parabolic move up to $100, and we've since been working our way down on the other side, back down to $4.10, up from 100, maybe 80, maybe 60, maybe 40, and maybe even 20. Now you are sitting at $4.10 on that stock. Okay, so let's take a look at another thought of mine I had. I was thinking about something that we had a big convention. It's EXP Con 2022, and I am curious as what to. I'm curious because let's take a look at the EXP chart. And so they're talking about a shift. How deep does this shift go? Uh, this is an EXP World Holdings chart here. And this is taking us back to 2014, 2016, 17, and 18. And so these levels here at 2 cents. So if you would have started back in 2014, 2015, you were getting your stock really cheap at 45 cents. You were getting it at $1. You had a run up to 286, came back down to 159, and then you're finally at almost $3. You're breaking the $3 level. You're looking really good, and so agents were getting revenue shares, and they were up to $10, and they come back down in 2019, and then in 2020 something happened. Oh, 2020, right there, we had something happen. Somebody stepped in and pumped the market. And I think we took interest rates to 2%. And so with the interest rates down, that just pumped the market up. And so EXP right here launched up to almost $90. Actually, they were like at 89, 87 or 90.24. It's kind of hard to tell. Let's zoom in closer to the exact amount. Yeah, so here's that all-time high of $90. Wow. Talk about a round number at $90. And so since then, we've been working our way down. We had a nice little dead cat bounce right here in May of 21. And then we had another, this is that bounce, that dead cat bounce that we get. And so if you didn't pay yourself in 2021, and if you didn't pay yourself, I hope you didn't sell down here, panic sell at $22, because they just brought the market right back up and liquidated what they had left at 55. And so since then, it's working its way back down to 1133. So we're looking at we're sitting at $11.33 right now. This is as of October. I will look at the exact date here back. This is October. And so one of the main things I like to do when I'm in a stock, especially when it moves this high. And so you're never going to hit the top of the market, but it is nice to capture this portion of the market right there. So that's the goal in trading. At least my goal, at least one of my strategies is to pay myself on the way up. So had I been long here in these lows at $5, say, because you see how long it took to build that momentum. It took all of this energy build up to get that move that we had right here in 2020. And so what is that? That's like from December of 18 all the way to April of 2020. So if you would have been long at $5, you would have been taking profit at 10, $20, $30. You would have been paying yourself. You see it shoot up to 50. You're like, whoa, man, let's sell some more. Let's sell some more. Hopefully you were able to put some orders in at just astronomical levels, 100, 90. Maybe you didn't get filled at 100, but you got filled at 90. And then you're gonna keep some, right? Because you don't know if this move's gonna exhaust itself or if it's going to keep moving higher. So you want to keep that. It's free stock at this point, anyways, because you've already sold at $50 and you've already sold at $60. And so if you have maybe a quarter of your holdings left, and so like maybe you want to let go a couple more, maybe you have well, I don't know, but maybe you sell some off at 83, right? Boom. And then you see this down move. Whoa, for a whole month, we're just like going down. For another month, we're going down 40, 40. And then like 3 months straight. So that's 1, 2, 3 months straight. We're going straight down to 22 bucks. Hopefully you didn't sell, or maybe if you did sell, you're still selling uh yeah, 45 bucks, right? But definitely I would not be selling here. I would expect this dead cat bounce and a move to come back up into test these levels here. Okay, so that's one thing here, but I did find this interesting here. And so we did have EXP Con. I think it ran from let's see, this is Friday, this is Thursdays, and this is Wednesday, and this is Tuesday. I think they started on Tuesday. So right in here. So it's Friday, Thursday, Wednesday, Tuesday, and Monday. So right in here was EXP Con. I think they were actually done by Thursday or Friday. But I want to point something out, and you tell me what you think on this, because this is a very interesting move right in here, right in here. So, uh, we all know where we're headed, right? We're headed down. We got a little dead cat bounce here. We're still moving down, but leading into EXP Con, since September, the market's pumping up. It gapped up higher to 11 bucks, and it was sitting at right around 12.90 during the conference. So during the conference, they made a couple key announcements. EXP is always on the cutting edge of technology, and they are always striving for growth. They've got several partnerships with different companies. So they were announcing a bunch of these new moves that they're planning on making for the future. Who knows how long this shift is going to last before the next move up begins. We're still waiting for that catalyst to mark the bottom of the market. But I did notice that this candle right here, this is a very major signal. Like this doesn't happen too often. And this is something that tells me that there was word, there was word, something, something must have been said, or somebody must have let something out. But this move right here, this candle just this candle just ate up all of this right here. This is what you call an outside downside key reversal candle right here. So this is a very powerful signal, and I'm going to show you something else here. So that's the conspiracy part of me talking. But I did find it come Friday, right? So this is Friday, EXPCon. I think it was over Thursday. So Thursday it was pretty up green, but by Friday, word got out and somebody sold some pretty good amount of stock after this conference right here. And so levels to look out for. So levels that is going to mark where the stock wants to head, right? So we've been moving down since here, but I've outlined some of these levels down in here. And so some of these are key levels to look at. And so this is what I like to look at right in here. So uh, that's the all-time low at 2 cents. I don't think we're ever going to come back down to 2 cents. But I can see possibly a test, I mean, a test, like it's not going to stay there for long, but $1 and then $3. So we're definitely going to be testing this price range right here. And so if this does happen, if we do test back down to 2.96 and $1, uh, that's going to be what they're talking about when they say the shift, because that's a long ways down. Take a look at this. So for that to happen, the shift, right? So this is the shift that I think that they're talking about. Like, I don't know if anybody's really like thought about what they're talking about. Like, they're just getting us ready for the shift, right? And they keep saying the shift, the shift. Okay. Yeah, that just means that we're gonna have to work harder as real estate agents, and some people are not gonna make it in the industry, and we have people moving to other brokerages, and um, right now is a good opportunity to hone up your skills and go through your database, right? Because we're going through a shift, right? But uh, this is a long ways down here, right in here. This stock, right? And I hate to say it, and this is not just EXP, right? I'm not picking on EXP. Uh, I'm not picking on them by any means at all. I mean, I'm EXP is my broker, right? I'm part of the club there with EXP, right? So you see my logo up here, right? It's a Forest Real Estate Group. I'm brokered by EXP Realty LLC. Uh, but so like I said, I'm not trying to pick on EXP. This goes for any other brokerage firm, real estate wise. So yeah, take a look at this. This is where I think we're headed, guys and girls. Um, so this is 2022, right? We're in 2023. We're towards the end of the year in 2023, right? So I think we have a move coming down, and then I think 2023 will be interest rates will be coming up even higher than they are. And so that's going to drive prices um, with the interest rates going up. I mean, it's hard to tell, but I can see the economy slowing down as interest rates go up. I mean, we've already seen it, right? The Fed has raised interest rates from 2.5% to 3 to 4 to 5 to 6. We're testing 7 and 8% right now. And in case you didn't know, this has never happened in the history of interest rates. This is the fastest rise of interest rates that we've ever had in the history of our United States here. And so I'll just draw this out. And this is what I'm expecting. I'm expecting this. I'm expecting to move down into January. And then we might get a little run up because markets never run straight down. And then this is 2023. More bad news in June, July, you know, May, all this summer, we'll probably get like a summer rally, right? April and May. But by the time May comes around, and June and August and September, October, November, Christmas time, December, I think we'll be testing these lows right in here. And who knows what's going to drive this price action. It could be anything, any news event can drive this down. It could be anything. I don't want to mention any kind of reasons, but it could be anything. You guys already know what's going on in the world with the various news events that are happening, but I want to say that 2023 is probably not going to be a good year. So 2023, right? And then by the time we hit 2024, we'll be testing these lows down in here. And it probably won't be until like 2025 when we start to turn the corner and get that long channel back up to where we start making higher highs and higher lows. And so it's probably going to look something like that. So 2026 is probably when we're going to start seeing those moves back up into the upside. 2027, 2028. And so for us to get back to these highs, that's probably what it's going to take. It's going to take this sideways action right here. As long as it took for this to build up to that is about how long it's going to take to get us back to that level where you want to be taking profits. Now this isn't an exact model, but it's kind of a roadmap, if you will, for those of you who are we're gonna go straight up from here, woohoo. I don't think we are. The only way we will be able to do this is if they drop rates again back to 2-3%, and we get some more stimulus in the economy. But we've already had people come out and say Fed chair has already said he wants to slow down the economy, and so that's why they're raising the rates the way they are. And so this is the roadmap I'm looking at. So we're right here. By the end of the year, we'll be down, and then probably just swim around. We're gonna swim around in here. We're gonna swim around. Just gonna be testing these lows back in here, $2-3, $1. What's gonna cause this panic dump before we move up? We don't know. One thing I do know, and what I can tell, is that something was said, and this is the conspiracy in me, right? Something was said at EXP Con, and word must have gotten out, because what just happened right here? What just happened right here? Right in here. What happened right there? Right here. This right here. Why would that happen? Anyways, I hope you enjoyed the content here. I hope I've been insightful for some people out there. But of course, this is not financial advice whatsoever. This is merely just entertainment at this point for me. This is just entertainment, but this is something I like to do. And leave me some comments, hit that like button if you find this content valuable or insightful. Share the love, and we'll hope to see you guys pretty soon. Bye now.